Today I got something very special for you, and honestly speaking, I fought with myself for quite some time if I really should record this video and share one of my most valuable tools for consistently earning good money from trading crypto and Forex with you. But then again, I actually understand very well how it feels when you are struggling to find a good trading strategy or indicators to actually make money with trading. There are just too many indicators and supposed trading gurus out there that promise a lot but then fail to deliver. The indicator I'm going to introduce to you in this video is called Market Equilibrium Index, or short MEI. And it is the result of a journey of almost 26 years, in which I try to combine all of my working trading strategies into one simple to use indicator. This indicator is the result of hundreds of hours of research and coding, plus 26 years of trading experience, and I'm very, very proud of it. And yes, I'm going to make that indicator available to you. More details on that at the end of the video. Please make sure before that to watch the whole video so you can fully understand how to harness the full potential of the MEI, when to take trades and when not to take trades with it. Also, please leave me a like, subscribe to the channel, and leave a comment underneath the video. That is sadly the only way the YouTube algorithm notices small YouTubers like me. Alright, before I start showing you the actual signals of the indicator, I want to explain a little bit how this indicator works and like the kind of the theories it is based on. As always, I'm using TradingView, so the indicator itself is also coded in PineScript, which is the coding language of TradingView. If you do not have a TradingView account yet, you'll of course find a link in the description of this video where you can sign up for a free account at TradingView, and the free account should just work fine for the beginning. So if you're just starting with trading and kind of want to find your way on how to be successful there. So the way almost all healthy markets work is, and in this example I have here Bitcoin US dollar, a long-term chart, a daily one that goes all the way back to 2016. The way most markets work is that most healthy markets work is that you have over time slowly rising prices. So this is symbolized here by this by this yellow dotted line. And price over time likes to always return to this, let's say, average price, to this slowly rising average price. And of course, over time, you also have kind of like deviations from this price. So it's a bit like a curve going. Sometimes the price will trade underneath this average price, sometimes the price will trade above this average price. But over time, it always likes to return to this average price. So what the MEI, the Market Equilibrium Indicator, does is it tries to spot where price deviates too far from the average, from the so-called fair price. So basically the highest and lowest points of this curve. Now this is of course a daily chart. However, what I'm showing here on the daily chart, this concept also works of course for the lower time frames. And indeed, I mainly actually use these indicators also very much nowadays on the lower time frames. So for example, on 2-minute charts or 5-minute charts. Let's have a look how this really works for example, Bitcoin. So instead of looking at the daily chart, for example, we can have a look here at Bitcoin US dollar on the 5-minute chart. I'm going to apply the MEI to it, and you can see that there are no fancy lines or other stuff that distracts you really from the core information that indicator is delivering, which is printing buy or sell signals onto charts. And you can see it works actually very well in spotting those highest and lowest points. Now, remember, this is a 5-minute time frame, so of course you're going to have more noise when applying this to the chart. But nonetheless, we see, for example, here these sell signals triggered really before we had this massive sell-off all the way down from 69,000 to 67,000 US dollars. Then it very well spotted here the low, the local low that is of a market. Then on the way up again, it was good in spotting those local highs and told you to sell here so you could harness also here those little dumps down. That was the case here. That was the case here. That also was the case here. If you held on longer to this position, you would have written again all the way down from almost 70,000 US dollars to 68 or 67,000 US dollars. It worked in this little dent here where we went to the upside again, although this one, of course, a little bit harder to trade. It spotted here the local low. And then yesterday evening, it also told you correctly that there would be a local high here before, again, the market started selling off very well. So as you can see, the logic behind the indicator works very well. Of course, you are going to have phases in the market that are more difficult to trade, which especially are these last three buy signals. The last two buy signals actually gave you plenty of opportunity to catch a move of around 700 to 900 US dollars. This one is a little bit more complicated. However, if we see, and remember, this is a 5-minute chart. Out of this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 signals, 9 signals were really, really on the point. So if you want, you can call this one down here a fault signal. And this is a 5-minute chart, so something that is normally very notoriously difficult to trade. We can have a look here at other assets as well. So Popcat, for example, this is a cryptocurrency meme coin, but I like to trade this coin because it has a nice volatility on the daily charts. You see very often prices ranging by 10% to the upside and downside. And this is even on a lower chart time frame. I like to use the 2-minute chart here to trade Popcat with this indicator. You can see here the indicator, the MEI spotted very well where the local highs and lows were. Again, this one a bit more difficult to trade. Nonetheless, here you entered probably around 67.50 and the market went all the way up to over 69. So plenty of time also to at least adjust your stop loss to break even again. You can see here very often also you'll have when there is a situation where the indicator thinks like, okay, this is now massively too much price action to one side, it will start printing these signals in clusters. And these are usually, from my experience at least, very good areas to really scale into the market. You can see here, for example, these last trades, it really spotted almost the bottom of the market. So you could have bought here for very, very good prices. Indeed, actually, I did. But it not only works for cryptocurrency, it also works well, for example, on the daily range here for Forex pairs. So this is a daily chart of Euro US dollar. And you can see also here, of course, you're not going to have so massively many signals because remember, this is a daily chart, but also here, very good in spotting local highs and lows. This one, buy signal, a bit more difficult. This one, super awesome, triggered shortly before we saw this huge move to the upside here, spotted the local highs here, started clustering the signals, especially this one before this massive sell-off, and then lately started accumulating again at the local lows euro dollar. This, for example, is something I like to trade with options. So I sell options there, a bit more a complicated product, but for me the better choice when it comes to longer term investments in the Forex markets, because if you trade this with spot Forex positions, you always have overnight financing cost, of course, that you need to take into account. So one way you can make these trading signals even better, in my opinion, is if kind of filter out where the good signals from the, let's call it average signals. I mean, even these signals are not bad signals. They are average. They don't have as much potential as the signals up here, especially. So one thing you can do, you can apply also concepts of support and resistance. And you can do that either by drawing lines on the chart by yourself. I think there's on TradingView here a very good indicator that takes that off your shoulders, which is called support resistance channels, zones, multi-time frame. This indicator is not my work, so it's by another user here of TradingView, but he makes it available for free, and I think it's a really good tool. So when I apply this one onto the chart, I actually need to go to settings here. I need to tell it which higher time frame support and resistance I want to monitor on my 5-minute Bitcoin chart. And I think it's a good idea, for example, if you're trading 5-minute charts, to use 1 hour support and resistance zones. It looks back 250 bars to spot these zones, and I actually don't want them to be shown here on this table. So now things become a little bit clearer in my opinion. So you should try to align these buy and sell signals with areas where this indicator, for example, says, hey, this here, Dirk, is a zone of either support or resistance, with the price now trading lower than these levels. These levels, of course, become zones of resistance. And this, for example, then puts this trade here into a whole new perspective, because when this trade triggered, so the signal was around here, we didn't have much space left to the next level of resistance in this case, which is this one here. So the upside potential here was very, very limited. And indeed, the market didn't even really try to attack this zone of resistance, but went down again. So ideally, you want, for example, signals to trigger very far away from zones of resistance. So if we would have had a signal, another one down here, that would have been a great signal, because it leaves us a lot of upside potential all the way up here. So we're talking here about $1,000+ on Bitcoin. And yeah, apply this indicator. It's just an idea. You can, of course, do this manually or use other indicators that kind of do the same thing, that also show you where are zones of support and resistance. Play a little bit with it, and I'm very sure you'll find a very good setting where you can combine my indicator, the MEI, together with zones of support and resistance. So how can you now access this indicator? Well, it's very simple. I'm going to do an open beta test for this one for the next weeks. Everybody who wants to test this indicator is welcome to test this indicator for free. You'll find in the description of this video a link to a Google form that you need to fill out, where you have to share your TradingView username with me, and then I will manually add you to this indicator, and you can find the indicator then here later on, once I've added you, under invite only. So you'll find there the indicator market equilibrium indicator, this one here. And yeah, feel free to test it. Feel free to leave me some feedback also. You should also join our Telegram channel for this indicator, where I want to share a little bit best practice and share the trades I entered with the help of this indicator. So moving forward, we can have a nice tool for you that can really, I think, elevate you and your trading to the next level. That's all for today. Remember to leave me a like, subscribe to the channel, and see you in the next video. Until then, happy investing.